we're going to do a pretty quick recap of markets, what's going on, and then Quady will give her update after that. So if anyone has any questions, feel free to ask. We'll try to keep this part pretty short. So start off Chinese trade progress. We continue to see updated export sales, flashes. China is buying soybeans. So far, not at a pace to meet the 12 million tons, but they are continuing to purchase beans. One of the big things to watch going forward is one, will they hit the 12 million tons and what it does to how they progress here as we move forward. On the sorghum side, we have heard some boats trading to China. We've seen some boats converted from other destinations into China as well, with some of that being Pakistan, being switched to China, and then some new boats have also been sold. Export sales so far are not showing that, but we're still about a month behind on export sales. We did get the first round of wheat. It was soft red wheat, a full cargo, and then a partial cargo of soft white and spring wheat off of the PNW. The market felt like there were multiple soft wheat boats, so we'll have to watch as we move forward. None of it was flashed during flash sales, so we'll just have to wait as we catch up on export sales. We did get an indication of a $12 billion farm aid package. If you have questions on that, you can talk to Trent or one of the RMAs. They'll have more information on that as we go forward to see how that's actually going to be paid out here. It sounds like it'll be paid out either in the spring or before March. So getting into weather, I mean, this time of year for wheat, not all that critical, but we do have some dry spots in southwest Oklahoma and creeping farther north. The outlook, at least short term, remains fairly dry. I think the key is we had decent moisture going in here, and then we'll just have to see where our weather is in the spring when we come out of dormancy, if what kind of crop potential we really have for hard wheat. So the one thing that is caught up is inspections. As we can see, corn and wheat remain above the pace to reach USDA's export sales numbers. The one thing on the hard wheat side for us is export sales have been dropping off. So even though we are ahead right now, seasonally this time of year, hard wheat inspections do start to drop off. And then looking at the bigger world picture, it doesn't look like the world's going to need hard wheat. So maybe USDA's right on exports or slightly high. Export sales, we got caught up through the first week of November so far. As you can see, we're ahead of pace on corn and on all of the wheats, but that pace is going to have to really continue to roll through here. And as we've just talked about, hard wheat especially, our competitiveness in the world has dropped off. We are now, once again, a residual supplier to the world. Export sales, were one of the lows of the year so far this week of 11.6. So hopefully we can pick up, our routine destinations, but with some of the crop sizes in South America and the Southern Hemisphere, it doesn't look like our wheat is going to be needed, at least here in the short run. So we do have a WASDE report today. Not much is expected out of this report. I think the trade guesses and versus our November report really indicate no one's expecting major changes to come out of USDA. So it should be a non-event report, but USDA has surprised us, and maybe with them being back at work for a full month or close to a full month, we will get some changes that the market's not expecting. USDA did come out with their baseline projections, which is the next 10 years worth of business, or what they expect out of the markets over the next 10 years. You look at their price lines for both corn and soybeans, they expect them to be pretty flat here, expect increasing yields, and pretty steady to increasing ending stocks for both corn and soybeans. So, they're not anticipating any major fluctuations here in the U.S. markets, at least on a baseline look. A lot's going to come down to world crops. And if everyone has decent crops moving forward, we probably trade in pretty stable ranges until, we see a crop failure in the world or another major event that restricts grain flow. So we'll get into price outlook here. I think soybeans probably have the biggest volatility here moving forward. Short term here, USDA might give us a surprise that gives us a little price direction. But when we sit and look, we have had some cancellations in export sales that have been, U.S. got overpriced. Even though we're doing some Chinese business, we've become uncompetitive to, a lot of other destinations versus South America. So we have dropped back below $11. And if you look at the chart, there is a big gap to fill at about 1063 to 1071. If we do get another sell-off and start to break through more of these moving averages and retracement levels, we could quickly trade sub 1060 pretty easily over the next few trade sessions. So something to watch if you have unsold beans. You might look at getting something on the books if we do get a quick rally today, or, be patient and see if we can get another rally moving forward. But the chart doesn't look great for soybeans, so it's something to look at if you have unpriced beans. New crop 26, still above $11 soybeans. So, if you're looking at next year's market, you might take a look at pricing something out in some of the deferred months. Going into corn and milo, it's been a pretty boring trade here over the last month and a half. I mean, we've had a 20-cent range in March futures. It's pretty quiet overall. I mean, anytime we've gotten above 445, it's been a pretty good selling opportunity. And when you look at the balance sheet, over 2 billion bushels in carryout, I don't see a big reason for us to get an extended rally here. So I think you take advantage of any short-term rallies and, stay patient if we do sell off a little bit. 26 futures, new crop at 465, would be better than any price that we've seen here from August through December so far. So you might take a look if you do have corn or milo anticipated acreage for next year. And the last one here, wheat price outlook. We've seen a few rallies where we've traded above 550, but when you start looking at, where the U.S. is and competitiveness in the world, hard wheat is, once again, just a residual supplier. We have good EU crops, mainly the French crop. The Southern Hemisphere has abundant crops and probably bigger exports. So, it's one thing to watch is we don't really need a rally in wheat, at least here in the short term. And with us not being competitive, we probably grind here in this same trading range we've seen over the last month. So one thing that could be friendly, or, it is going to be weather trading season as we move through the winter here. There is an increased risk in Russian winter kill. We get these every year, winter kill. We try to kill off the crop 5 or 10 times during the year. So this is just the first round of it. But we'll have to watch and see that over the next 7 to 10 days and see if there are any issues that arise from that. 26, 27 wheat again. Good opportunities to at least get part of the crop locked in. One thing we did look at was a seasonal or an average price contract. This would be versus the September board, but if you do an average price contract from mid-April through the end of June, the performance versus price on August the 1st, it has pretty good performance compared to just selling grain on August the 1st. So, a few options out there. Talk to your RMAs. We can look at any way, average price or any of the other contracts they offer. So that's what I've got for today. As always, if you have questions, contact your local RMA on pricing and contract options.